Good evening, guys. Good evening, everyone. A quick sound check. Am I audible? Great. So today's session is about the NTM Volume Chart, which is a very good tool and a great arsenal which we have at the VTrender chart section. So let's start with the chart itself and see what all we have in the chart. So I'll have the Volumex chart adjusted of today so that we can see what we have done today. So what are the components which we have in the Volumex chart and how do we use this chart? So the candlestick which you see is the Nifty spot because we are right now looking at the Nifty Volumex chart. This is the Nifty spot price which is moving, and we have a blue line which is showing us the call volumes, and then we have the purple line which is telling us the put volumes. So how does this show us when the demand and the supply is deviating, or which is the more dominant force? So you can see how for the first half of the day both of them were running parallel to each other. They were unwinding, they were coiling. We had multiple instances of the blue crossing the purple and then the purple crossing the pink. Hence, that is the reason we did not have much of a move in the first half, especially on long side options. And then you see in the afternoon, there is a definite move in the blue side on the up. This is exactly the time where we got that range extension to the upside in Nifty, and we went on to make marginal new highs in spot. Although in futures we were not able to take out previous high, in spot we made marginal new highs. 25035 was the high of yesterday, and we tested that high. 25037 was the high we made today. So what this is telling us is clearly where the demand is more and where you can expect more upside, and where the supply is dominating and where you can expect downside in the instrument. So this is today we did not have much of range, hence there was not much of distance between this. So how do we trade this volume X? So we look for signs if it is showing us that the market is in an imbalance or a balance. How do we know that it is in an imbalance? For an imbalance, we would want one of the call or the put volumes to start a swipe, which happened in this. And once it starts a swipe, we want the distance between the purple line and the blue line to keep on increasing. But what happened today was the distance was almost constant. It never went wide. It never diverged. So that was telling us that you cannot expect too much of a range in the auction today. So if I take you back, because we have got a new settlement from yesterday after the Tuesday's expiry, the volumes which started, if I take you back to yesterday's chart of the volume X, you can see how at the open the call was dominating. Although the put was not dropping, there was small distance building between the both, and the call always remained above the put for the first hour or hour and a half. So this is the peak which we made, where the distance between these two lines was the highest for the day. Nowhere for the rest of the day you can see this kind of a distance between the lines. So this is where we made that high in the C period of 25125. So you can see how it gave us a peak right at the highs of the day, after which the distance started to come down, which was telling us that there was not much of calls which were adding, and the put also started to come near the calls. And here you got this crossover of put volumes above the call volumes. So this was telling us that now it is no longer bullish. And after this, we got this swipe in the put, where we got a brief move lower. And in spot, we tagged an important level of 24918, and we stopped there and gave a bounce back. So this is why we see that again the call is coming back about put. For this to continue down, the purple line should have continued to diverge higher, and this call volume should have started to come down. Then we could have expected a big drop into the close yesterday, but that did not happen. And that is the reason we gave a bounce back to close at the POC. And yesterday was a neutral extreme profile. Neutral center profile. For it to have been a neutral extreme in spot, we should have seen more divergence in this purple line. So this was the start of a move. This should have continued. So purple line should have continued to go up. It made a peak over here and then it dropped. And then this call, which was dropping, made a swipe here. So this swipe, when it makes these kind of swipes, it is telling you that the character is changing and you need to be aware about your trades if you are in a short side trade. So this is how you watch. You look at this volumex and it tells you what the market is doing, and it tells you also when the market is in imbalance. And how do you trade when you see an imbalance? You look at going long in options. You take out an order flow chart of the in the money option and look for IB signals and to make use of this imbalance which is there. So that is what is that is how you need to play out. What I'll do is I'll just do a quick review of the last 3-4 sessions, and we will compare them with what has happened in the market profile chart of that day. And to start with, best would be to start with today's auction. So I'll just open up the spot chart of Nifty. So you can see what we have done in spot using market profile. We made an open auction in range. So we always tell that we are looking at market profile to understand the structure. So yesterday was a neutral center profile and we had a nice Gaussian curve. So this value of yesterday was very important. And what we did today in the morning was we opened below this value and we got back into this previous day's value. You can see this A period buying tail. So which is telling us that it does not want to stay below this value. So the downside was kind of negated in spot. And what it did was it triggered the 80% rule in this previous day Gaussian curve. And that is what we did. The A period went on to tag the highs, value area high of previous day. And after which we began to coil. But in the coil, what we did in the E period is we made a pullback low right at this value area low of yesterday. In fact, the value area low was marked as a hypo for today on the downside. So we were bearish below 24958, which was the value area low of yesterday. But you can see the E period low was right there. Even the B period low of today was right there. So when you're leaving a buying tail at previous value, you know that it is not going to go down. And then after it completed the coil, that is why we got this range extension in the G, and then we went on to test this field auction of yesterday. So although it was an open auction in range and a narrow range day, yet again we remained in previous value. But what market profile showed us was the auction rejected the probe below the previous value. So there was a very good chance of testing the previous high of the previous value and also the previous failed auction, which was caused by this seaside extension. So this was the setup in market profile. And if we come back to the VWAP chart, you can, this is the Bank Nifty VWAP. I'll come to the Nifty VWAP chart of today. So you can see how at the open, both of them were very close. This, although the call volumes is above the put volumes here, you can see they are almost in sync with each other. So this is not giving you any confidence to take any trades. This divergence, the first divergence, which slightly came in the put was over here, where we were expecting a seaside extension on the downside. But then again, you can see it hardly diverged. The volume, the distance never went higher. And then you saw this again call volume coming above the put volume. So this kind of a volume X chart is telling you that you need to be patient and you need to wait for the setup to play out. There is definitely no trades on the long side in options if you have got this kind of a coiling or snakes hugging each other, as you can call it, because you have multiple instances of crossovers here. So this is very clearly telling us both the buyer and the seller are no one is in control and both are just testing each other. There was a slight rise in the put volume X here, but then the call volume X never dropped. It never went down. And the distance, although it became little divergent over here, but again it came back. And here, once this started in the G period, you saw already how in the G period we got that range extension after the coil mode. You can see after this, the call volume never went back below the put volumes. Yes, the distance also was not great between both. They were running parallel to each other. Hence, we did not get a big move. But here in the afternoon, in the G period, it very clearly told us that now it is better to look for upside. There is no question of looking on for downside. And the volume X was very clear to show that to us. So on days, today was a very narrow range day. It's on an open auction in range, and all day we were mostly in previous value. So on days like this, you will not have much good trade facilitation when it comes to long options. So even today, it was the volume X chart is able to show us when you needed to be biased on the upside and when you needed to just stay put. So after this divergent was the time where we made new highs for the day, and we continued to make marginal highs if they were, but they were all new on the upside. So, but it was clearly there is no trend here because both of them are running parallel to each other. So for a trend, this put volume max should have come down and this should have steadily gone up. It is not steadily going up. You've got up and down, up and down, up and down curves. So this is very clearly telling that the auction is not smooth over here. So if I just run through some previous sessions, and I'll take you back to the 5th of September, which was a very important day. We'll see the volume X chart and then we'll come to the market profile chart to see what happened that day and how the volume X could depict what was happening in the market. So, sorry, this is the 8th. I want to show you the 5th of September because this was a day where we got two-way auctions, and very clearly the volume X was telling you when you need to be biased on the downside and when you need to be biased on the upside. So this is the 9th, this is the 5th of September, and at the open you can see the open was not decisive. Both of them were parallel to each other. And here, after the initial balance got over, we got this swipe in the put volume X. So this is where you started to look for long side trade in puts, and market also rewarded the short sides because you can clearly see how the distance is diverging, and it went to a peak over here at 12:45. So this was when you know that the shorts are in control. But once you hit a peak and when the next TPO is not able to get above that peak, then it is time for you to become circumspect in that direction. So you can see how this was telling you that now the auction is changing the character because the put volume X, not only the put volume X started to drop, the call volume X started to go up. And then here, this part, around 145, you can see how clearly there was a swipe reversal. The call volume X swiped higher and the put volume X swiped lower. So this was telling you that the auction is now changed character in middle of the day. So from this period onwards, you were looking for upside. And this is on the 5th of September. So we have seen this volume X chart. Now let us go to the market profile chart of that day and see how the market profile was, what the market profile was showing us on that day. In fact, you can have the two window mode and see both of them side by side. I'll do that after we finish this analysis. So this is the 5th of September, the day which we were analyzing. And what did it do? You can see how after the first A period where we saw both the call and put volumes close to each other with no directional movement, because this was an open auction in range and we remained in previous value. But what happened B period onwards? We got left an extension handle here and we broke below this value area. So in market profile, we trade value, we don't trade price. So when the auction is moving away from a certain value, from previous value, you know that is where you have good trade facilitation. So that is the reason once we gave an extension handle here, we saw the put volumes going above the call volumes, which continued with this big seaside extension. After which we had a small coil, but still we went on to make lower lows in the G and H. So that is where till 145, you saw the put volumes making the peak and the call volume making a lowest drop. And then in the I period, you can see where we have got back into this initial balance, which is where the volume started to diverge. We saw the put volumes coming down and the call volumes going up. And then in the afternoon, when we got back above the VWAP of the day, this is the spot chart, so we will not have the VWAP in this. But when we broke above the VWAP of that day, you had this big swipe in the call volumes and the drop in the put volume. That is where the auction changed the character and we went on to negate this extension handle of morning and we closed above inside the initial balance. So this is how you can clearly see how the volume X is supporting what is happening in the auction and the market profile, which helps us to understand the structure. We were bearish here because we were getting an extension handle. We came below previous value. So as long as we were below this value, we were looking for more downside. Our target was this VPOC, but we stopped short right at this important level, which if I get back to what we discussed on the monthly time frame, was exactly the POC of last month of August. 24624 was the monthly POC, which we have covered in the session where we review the month, and this is where we made the low. So when you see this happening, you know now this is not just a intraday support which you are living, but a big swing support on the monthly time frame which you are living. So since then, you can see on the daily time frame what we have been doing in Nifty is form higher value. So that is why we have these monthly references marked up and we make sure we have them in every session so that whenever we are leaving a mark, we know how it is phasing out. So you can see how we formed higher value after we left that low at the monthly POC. And then the next day again, although it was a neutral center profile, the value formed was higher. And we left one important failed auction at 24814. So then we got this gap up on the 10th, where we negated the selling tail of previous week. This was negated and then we formed a neutral center profile. And today again we have remained in that neutral center profile, but we have supported this value. So this is how you can compare the market profile and make use of the structure and then align it with the NTM Volume X chart. So now if I take you to the Bank Nifty, although Bank Nifty does not have too much of volumes on the monthly now, because the weekly settlement is down and monthly comes after the 3 or 4 weeks of the weekly expiries of Nifty. So the volumes are on the lower end, but still it does give the same indication of what is happening and when the things are turning. So the same date, you can see this 5th of September, even in Bank Nifty, you can see the market profile chart, how we left this low in G, just stopped short of this POC. And I have discussed this in the Monday session where we did the weekly review of how this was telling us that the sellers who had come on 4th were not able to break this POC. And we gave a bounce back. And after this bounce back, what we did on Monday, we had a weekly neutral center profile last week in Bank Nifty spot, and we left a failed auction right at the test of that weekly POC. 54080 was the weekly POC and 54067 was the FA which we left on Monday. And on Tuesday, we left a low right at that weekly POC. 54079 was yesterday's low in spot. So you can see how all of this is telling us that after this swing low and this failed auction, we discussed on Monday in the 5 p.m. session how Bank Nifty would be bullish as long as this FA is holding. And when on Tuesday, we actually opened weak, we went below this POC of Monday and we made range extensions lower. But this failed auction was defended. And after this, we got a bounce back in the second half. This one. So this was an inside bar with mostly inside value. So it was nowhere a bearish scenario because this failed auction was defended. And after that, what we did in Bank Nifty also was get a gap up. We got this gap up and we made new highs for the month, but it got stalled in the seaside extension. And today, same like what we saw in Nifty spot, see very clearly. And today also in the hypos for Bank Nifty spot, first hypo was this 54, a lower hypo was 54385. Yes, we broke below this previous value area low, but same, just like in Nifty we saw, we've left an initiative buying tail. This probe got rejected and we got back into previous value, completed the 80% rule in the A period itself, after which we mainly remained above this POC, not just the value area low. And that is the reason we went on to make this big range extension in the G and made new highs for the month. So it was very clear how structure wise we were looking bullish in Bank Nifty after that low which we made on 5th of September. So let's just see quickly the MTM and NTM Volume X chart of Bank Nifty from the 5th of September and how it has been in sync with what the market profile and the structure have shown us. So this is the Bank Nifty Volume X. I'll take you back. Let's start with the 5th. And in Nifty, we have a reset every Tuesday. Tuesday, the settlement gets over. So Wednesday, it's time for fresh volumes to come in. But in Bank Nifty, it's the monthly series. Give me a second, guys. I'll just reload the NTM Volume X chart of Bank Nifty. And we will go back to the 5th of September. So Nagraj has a query. Elite expert plan is what is suggested because, the elite access is what is suggested because NTM Volume X chart is something which you need to watch live because it has live tick by tick data. And this is very important because it takes seconds for the Volume X to shoot up. So you need to be at least on the elite access to be able to make most use of it because you have real-time feed directly from the NSE servers. So this is where you want to be when you want to make use of this latest tools because they are these are tools which are validated by time and you need to use them appropriately. So if you lose out on time, then you may lose out on the right timing in entering. So elite access is what is suggested to make most of the NTM and the other gamma density chart also. So we are 5th of September. This is the Bank Nifty Volume X. So same thing, the Volume X lines in Bank Nifty would be very low because you can see the ratio is very small compared to what you see in Nifty. But still, nonetheless, it does shows us what the option inventory is doing and how we are placed. So you can see how it was a narrow range day till 115 and here you had this swipe. This was a decisive move by the calls. And not just that, after this day, if you just check the volume X chart of every day till today, Bank Nifty, you'll always find that it has been the call volume X which is above the put volume X. So what is this telling you? This is the 8th of September. You can see how clearly the call volume X has been above the put volume X all day. Yes, the distance is not increased too much except for this where we made those highs on 8 into. So, but you can see how the structure is very clearly showing us that the bias is definitely to the upside. So we'll just check out the next 2 days also. So this is 9th, yesterday's, where you can see how the call volume X was above. There was a small exchange here where the put did come near the call, but immediately the call came back above. So you can see how it has been always telling that you Bank Nifty is now looking good for upside. And today again, right from the open, sorry, this is yesterday's. Yesterday, the gap up saw the put volume X rising, and you can see how the distance between these two was maximum where we made those highs in Bank Nifty in the C period, after which they ran parallel to each other. So it not only tells you which is in control, but it also tells you where the imbalance was at the highest peak. So after this, it was only consolidating and it was just maintaining the distance between this. So, and nowhere we got a sign to get into shorts in Bank Nifty. And same thing with today's volume X. We already saw what the structure was showing us. Let us see what were the signals we got in today's volume X in Bank Nifty. So the opportunities are less to trade in Bank Nifty because the volumes are lower in options because it's the monthly series. But it is still, the volume X is still showing you which of the two is more in sync. So today we saw how the open below previous value got rejected. We got into previous value and hence the put volume X never got above the call volume X. And we continue to rise. We in fact made new highs in Bank Nifty today. So this is what the volume X does. It is a very useful feature, and it is something which you can use every day to be able to understand if the auction is in imbalance or in balance, and if it is in imbalance, how long is the imbalance going to continue, or is the imbalance continuing, and how long you need to be looking for trades, or you need to hold on to a trade which you have got into because of that imbalance. So just to make a quick review, the elements in the NTM chart, the C volume is the blue line, the P volume is the purple line. So the blue line represents demand, the buy side pressure, and the purple line represents the supply and the sell side pressure. So when the blue gets above the purple, it is telling us the demand is overpowering supply. So we can expect the price to rise. And vice versa, when the purple gets above the blue, it tells us that the supply is dominant. So the price is likely to fall. And if both lines are in sync, that is the time when you know the market is in a balance and where the writers will rule and the decay of premium will happen. So this is what it is, and we have a couple of articles also on the website which explains what this chart is and how you can make use of it. We have shared the link, and how we call it the unsung hero of option trading, the NTM Volume X chart. So we have explained in detail how you can use this chart and what are the elements, and when the chart is showing the peak imbalance, and when you need to understand that the market is in control of writers. So it is better you wait for a better opportunity. So that is it from my side for now, guys. In case you have any queries about this topic or any of the topic which we have covered, you can send me a DM on X. My ID is @Uttam and hopefully you'll be able to use these tools in a much better way. You can also email us at support@wetrender.com. We'll be happy to get feedback and also answer your queries. So we'll be happy to know if you are being able to use this tool in a better way and use it for your trading. It will definitely help. It will definitely tell you when you need to get into a trade, and it will also tell you when you not need to just save on emotional capital, which is what was the case today. So thank you, guys, and signing off for today, and let's meet up next week.
You wouldn't face Jasprit Bumrah with a plastic bat. Yet thousands of traders enter India's derivatives market with zero trade.
4% of traders lose, not because they aren't smart, but because they chase candles and ignore what institutions are actually doing.
Our 12-video e-course reveals how markets actually move through order flow and market profile. See the forces behind price, not just price itself.
Stop reacting to candles. Start reading institutional intent. Join the e-course now. 4,909 for lifetime access.